Welcome back to the deep dive. Today, I want you to picture something. Picture this document. It's thick, it's full of tables, and the title. Let's be honest, it sounds like a guaranteed cure for insomnia.
It definitely does not sound like a beach read.
No, it's the Consolidated Quarterly Report for Q3 2025 from Kghm Polska Midu SA. But, and this is a massive, but once you actually start digging in, you realize you're not just looking at a mining report.
Not at all.
You're looking at the plumbing of the future global economy. We're talking copper for AI data centers, silver for solar panels. I mean, the raw materials that keep the lights on.
That's exactly right. KGHM isn't just digging holes. They are providing the absolute essentials for the energy transition. Yep. And the scale is just staggering.
So our mission today is simple, but maybe a little ambitious. We're going to crack open this report specifically for the period from January to September 2025 and figure out if this industrial giant is actually healthy.
Right. Is it a well-oiled machine, or is it just, coasting on high metal prices?
And to do that, we've got to navigate some tricky terrain.
Oh, yeah. We've got currency fluctuations that can just wipe out profits, massive maintenance shutdowns, and a very, very surprising story happening in the Chilean desert.
I love a good redemption arc, but before we get to the drama in the desert, let's start with the cold, hard cash, the headline numbers.
Let's do it.
So I opened the report, and I was expecting to see massive growth. Copper prices are high, right? Everyone needs copper.
You would think.
But then I look at revenue from contracts with customers. For the first 9 months of 2025, it was 25.87 billion PLN.
Which is a huge number. Undeniable.
It is huge, but here's the thing. It's lower than last year. In 2024, they were at 26.1 billion, so revenue's down.
Okay.
And then I looked at the net profit line, and I actually gasped a little. It dropped to 1.01 billion PLN.
Down from 1.31 billion.
Yeah, that is a 23% drop in profit. If I'm a shareholder, I'm sweating. I'm thinking, okay, prices are good, but this company's making less money. Should I be worried?
That's the instinctive reaction, and it's a totally fair question.
Mm-hmm.
But in the world of global mining, net profit can be a bit of a deceiver.
A deceiver.
Yeah. It doesn't always tell you how well the actual mining is going. To understand that drop, you can look at two specific culprits, and neither of them means the core business is failing.
Okay, lay it on me. Who are the culprits?
Culprit number one is the exchange rate. This is where KGHM lives in two worlds. They sell their copper and silver to the world in US dollars. That's the standard.
Right.
But their biggest operations are in Poland. Their miners, their electricity bills, their taxes, that's all paid in Polish złotys.
Okay, I follow. Earn in dollars, spend in złotys.
Exactly. Now, in 2025, the US dollar weakened a lot against the złotys. It averaged about 3.80 PLN. The year before, it was almost 4 PLN.
So let me see if I've got this. It's like, I sell a cup of lemonade for $1. Last year, that dollar got me 4 złotys to pay for lemons.
Right.
This year, that same dollar only gets me 3.80 złotys.
Precisely. You sold the same amount of lemonade, you worked just as hard, but your reported profit in złotys looks smaller. It's an accounting headwind.
That is incredibly frustrating. It's like losing money just by moving it from one pocket to another.
It is, but it's part of the game. And the second culprit is simpler. They sold the Sudbury assets.
Ah, yes, they sold a mine.
They sold it in February 2025.
Yeah.
So, of course, the revenue from that mine isn't on the books for the rest of the year. When you compare it to 2024, when they did have that revenue, the 2025 numbers just look smaller.
Okay, so a currency handicap and a missing mine. But I'm still stuck on the fact that profit is down. Is there a number that actually shows the health of the core business?
There is. And this is the real aha moment of the report. You have to ignore net profit for a second and look at adjusted EBITDA.
Earnings before interest, taxes, depreciation, and amortization, the mouthful metric.
It's a mouthful, but it's the truth teller for operations. It strips out all that noise. And guess what? Adjusted EBITDA actually rose.
It went up.
It went up significantly. It hit 7.2 billion PLN compared to 6.2 billion the year before.
Wait, hold on. Net profit is down 23%, but the core earnings are up by 1 billion zloty. That is a massive disconnect.
It's the difference between your salary and the cash in your wallet. Think of it like this. Your household got a salary raise. That's the EBITDA. Your core earning power went up.
Okay.
But maybe you paid a big one-time tax bill or had a bad exchange rate on a vacation. So the actual cash left over at the end of the month, the net profit looks lower.
But the job, the salary is secure and it's growing.
Exactly. The machine is running hot. They're operating more efficiently than before.
Okay. That changes the perspective completely. So if the machine is running hot, let's talk about the gears of that machine, the actual mining.
Let's dig in.
Poland is still the heart of the beast, right?
Absolutely. The domestic operations are the foundation. But looking at this report, the Polish operations were a bit sleepy.
Sleepy.
Well, maybe resting is a better word. Production of electrolytic copper was 421,000 tons. That's actually down about 4.6%.
Why the drop? Did they run out of rock?
No, nothing so dramatic. It was a planned maintenance shutdown of the Kghm 2 smelter.
Ah, maintenance. The unsexy reality of heavy industry.
It's necessary. You have to shut these massive furnaces down for repairs and upgrades. When the smelter is off, you can't produce the final product. It's standard, but it leaves a dent in the numbers.
So copper took a nap, but I noticed another metal in Poland that did not take a nap. Silver.
Silver was the unsung hero. While the copper smelter was getting a tune-up, silver production actually rose to 976 tons. That's up 1.4%.
People often forget KGHM is one of the biggest silver producers on the planet.
They really are. It's a huge part of their portfolio. So while copper was slightly down, silver was working overtime.
I like that. But the real drama, the real story in this report, it isn't in Poland. It's halfway across the world.
That's right. We have to talk about Chile, specifically the Sierra Gorda mine.
Now, correct me if I'm wrong, but for a long time, Sierra Gorda was kind of the problem child of the KGHM family.
That is a very polite way to put it, yes. It's a joint venture, and for years it faced challenges, cost overruns, difficult geology. Analysts were very skeptical.
But in this report, it reads like a total redemption arc.
It is the absolute star performer. The numbers are staggering. Copper production skyrocketed, up 14%. But that's not even the craziest part.
What's the crazy part?
Molybdenum.
Molybdenum. I definitely practiced saying that this morning.
It's a tongue twister. It's a metal used to harden steel. And at Sierra Gorda, production of molybdenum nearly doubled. It was up 95%.
Doubled. How do you just double production in a mine? Did they find a secret cave full of this stuff?
Essentially, yes. In mining terms, we call it a high-grade zone.
Okay, explain that.
Imagine a marble cake. You know how some slices have a tiny bit of chocolate swirl and other slices are just thick with chocolate?
I'm listening.
For years, they might have been mining the vanilla part. But this quarter, they hit a massive, thick vein of the chocolate swirl. The ore they were digging up just had way more metal in it.
So, same amount of digging, but twice the reward.
Exactly. And because molybdenum prices are high, that translates directly to the bank account. Sierra Gorda's adjusted EBITDA jumped 60% to $970 million.
A 60% jump is massive. That almost doubles their profit from that one mine.
It validates the entire international strategy.
Yeah.
This quarter is the answer to why a Polish company is messing around in the Chilean desert. When the Polish smelter is down, the Chilean mine is having a record run.
It's the portfolio effect. Don't put all your copper in one basket.
Precisely. But we have to be balanced. Not every international bet pays off every single quarter. If Chile is the star, the U.S. operations, the Robinson mine, were a bit of a struggle.
Yeah, I saw that production there dropped.
It did. And it's the opposite of the Chile story. At Robinson, they were mining an area with lower ore grade. They were eating the vanilla sponge this quarter.
So Poland is steady, but in maintenance, Chile is skyrocketing and the U.S. is dipping. It really shows why you need that diversification.
Completely. It smooths out the bumps. And speaking of smooth, I want to go back to Sierra Gorda because there is a number there that is honestly kind of magical.
I think I know which one you mean, the C1 cost.
Yes, the C1 cost.
Okay, for everyone listening, C1 is basically the cash cost to produce a pound of copper. It's the industry scorecard.
Right. And for the group as a whole, the C1 cost was about $3.14 per pound, a fairly standard number.
But then I looked at the line for Sierra Gorda, and I rubbed my eyes. The cost there was $0.98.
Less than $1.
How is that physically possible? If the group average is over $3, how is one mine doing it for under $1?
It's not alien technology. It's all about the byproducts.
Yeah.
Remember the unpronounceable metal?
Molybdenum.
And gold. When you mine copper, you often find these other metals in the same rock. In accounting, you sell those bonus metals and you credit that cash against the cost of mining the copper.
I think I need an analogy here. This feels like accounting wizardry.
Okay. Imagine you run a bakery. Your main business is selling croissants. But to make them, you have costs. Flour, butter, rent.
Sure. Expensive croissants.
But what if every time you bake a croissant, the oven also magically produces a high-value chocolate truffle on the side?
I would really like this oven.
You take those truffles and you sell them. And the money you make from the truffles, you use that to pay the rent and buy the flour.
So my cost to make the croissant goes way down because the truffle paid for everything.
Exactly. In Sierra Gorda, they found so much molybdenum and gold and sold it at such high prices that it paid for almost all of the digging and processing.
So they were practically mining copper for free.
Almost. The cost dropped by nearly 46%. It's a perfect example of why geology is king.
That's incredible. Producing a pound of copper for 98 cents and selling it for what were prices at?
Copper was averaging about 9,556 US dollars a ton, so that's roughly $4.30 a pound.
Cost under $1, sale price over $4. That is a margin you dream about.
It's a money printing machine when the geology lines up.
So we've established the machine is working. What are they doing with all this cash? I saw they spent 2.5 billion PLN on investments in just 9 months.
They are. And it's not going to yachts.
No.
No. They are digging holes, very, very deep holes. In mining, if you stop developing new tunnels, you die. So they drilled 32 kilometers of new tunnels in their main Polish mines.
32 kilometers. That's almost a marathon. Underground.
It's a marathon through solid rock, hundreds of meters underground. The scale is mind-boggling.
Wow.
And that's just horizontal. They're also sinking new vertical shafts, the GG2 Odra shaft and the Ret Cow shaft. These are massive projects to secure access to deposits for decades to come.
I want to pause on that word decades because I saw a date in the strategy section that just stopped me in my tracks. 2055.
Long horizon.
It's kind of mind-bending. Most companies are sweating about Q4 of this year. Kghm is pouring concrete for operations they plan to run for another 30 years.
It forces a completely different kind of thinking. You can't just maximize profit today if it compromises your ability to exist in 2040.
And part of that resilience seems to be high-tech. I got pretty excited about the e-industry section. They're testing robots.
They are a specialized robot that can work in the high temperatures at the Kghm smelter.
That makes so much sense. Keep people safe, send a robot into the heat.
Exactly. Safety and continuity. And they're also rolling out automatic fiber optic diagnostics for their conveyor belts.
Which sounds a bit technical and boring compared to a fireproof robot.
It sounds boring, but think about it. These conveyor belts carry thousands of tons of rock. If a belt snaps, the whole mine stops. Production goes to zero.
Ah, okay.
These fiber optics act like a nervous system for the belt. They can sense a weakness before it breaks so they can fix it on a schedule instead of in an emergency. It saves millions.
A nervous system for the mine. I like that. Now, here's something that caught me totally off guard. They're selling gold bars to regular people.
Yes, this is a fascinating pivot. They've started selling investment gold and silver bars directly to individuals.
So I can literally go to Kghm and buy a 1-ounce bar of gold.
You can. Up to a 1-kilogram bar if you're feeling flush.
Why would a massive industrial giant bother with that?
Margin and brand. Instead of selling all their gold to a bank at a bulk rate, they capture the retail markup. But more importantly, it makes the brand visible. A gold bar with a Kghm stamp sits in a safe. It builds a connection.
It's clever. Own a piece of the mine. But there's another side to their public image that's even more critical, and that's the environmental footprint. How are they managing that?
They're making some big strides, particularly in energy. In Poland, they produced 39% of their own power using gas steam blocks and renewables.
That's a big deal for energy security in Europe.
Huge. It insulates them from price shocks. But if we go back to Sierra Gorda, our star performer, it gets even better. That mine runs on 100% renewable energy.
100%. For a mine, that needs a massive amount of juice.
It does. But they've signed the right power agreements. And it matters to the bottom line. Green copper is becoming a premium product. Car manufacturers and tech companies will pay more for it.
So it's not just saving the planet, it's a competitive advantage.
Precisely. And they're tackling water, too. They reported successful tests of a desalination plant using reverse osmosis to reduce salt discharge into the Odra River.
So they treat the salty water from the mine before it ever touches the river.
That's the goal. It's less of a nice-to-have and more of a license to operate for the next 30 years.
So, stepping back, this report feels like mixed signals on the surface, but a very strong engine underneath.
I think that's a perfect assessment. You glance the headlines, you see revenue down, net profit down. You might think, trouble.
Yeah.
But when you dig in, you see that's mostly currency and accounting noise. The adjusted EBITDA, the cash machine, is humming along better than ever.
And the diversification is working.
That's the big takeaway.
Yeah.
Sierra Gorda is proving the wisdom of that international expansion. It's carrying the team right now.
And they aren't just hoarding the cash. They are dumping it back into holes in the ground for the long-term future.
That aggressive investment is what stands out. They are building a company to survive the transition, providing the very metals that transition needs. They are playing the long game.
It's a fascinating look. So here's a thought to leave you with. We live in a world that is obsessed with speed. We worry about next quarter's earnings, the next app update.
We do.
KGHM is currently digging a hole, spending billions that they don't plan to fully finish utilizing until 2055.
It puts things in perspective.
It really does. How does a 30-year operational horizon change the way a company thinks about profit versus survival? If you knew you had to be in business in 2055, what decisions would you make today?
I think most of us would make very different ones.
Something to mull over. Thanks for listening to The Deep Dive.
Until next time.
See you underground.